what you see in movies and you see in like social media for that type of thing, it's true. It's true. It still exists today. The Wolf of Wall Street still exists today. There are still penny stock scams. There are still penny stock promoters. There are still these companies that they're selling you that are garbage, that are going up in share price in some form of pump and dump and dropping back down. There's a lot of money in it still. There's a lot of people out there that are making money doing this type of thing. And after about 2 years, I grew my channel to 6,000 subscribers, and I got canceled, I got doxxed, and I got threatened with lawsuits, right? Because exposing too many of those scams really puts a target on your back. And yeah, it was not a fun experience.
This is Cameron, the voice of Common Sense Investing. First got into trouble exposing some of the dirtiest penny stock pump and dumps. Now he's focused on uncovering the rare microcap companies with the potential to return 100 to 1. In this interview, you'll learn how to spot scams, avoid traps, and find the tiny companies with the potential to become 100 baggers. The first question I asked Cameron on this exciting interview is, when people think of penny stocks, they often picture the Wolf of Wall Street. How is the reality of penny stock investing different today? Let's see what he has to say.
So here's the thing, is that what you see in movies and you see in like social media for that type of thing, it's true. It's true. It still exists today. The Wolf of Wall Street still exists today. There are still penny stock scams. There are still penny stock promoters. There are still these companies that they're selling you that are garbage, that are going up in share price in some form of pump and dump and dropping back down. I think what has really changed is the fact that you have to realize that two things can exist at the same time and both can be true. So just because the existence of like the Wolf of Wall Street type people are out there and that these scams do occur, we need to realize that is the truth. But the other truth on the other side is there's still some fantastic small companies out there that are growing really quickly that deserve investor attention. And the real truth here is that there is a group of microcap investors out there that are building these strategies and forming these groups and, you know, investing in these small growing companies, and they are doing very, very well for themselves. So it's interesting to me. I'm not going to sit here and be like, you know, the Wolf of Wall Street is done and we don't have that anymore, and that was just a movie. I mean, no, we still get that today. So originally when I had started on social media, and that's what has really changed with microcap investing or penny stock investing. We call ourselves microcap investors, right? Inflation, not a lot of stocks are worth pennies these days. They're typically, 50 cents to $1. But what happened with me is that I was a microcap investor. I was a penny stock investor. And it wasn't until about COVID time, right? Where I got on social media for the first time. I was a no social media guy. I had no Facebook. I had no nothing. 43 years old at the time, 42 years old, I got on social media. And I realized, like, wow, there are other people out there like me that are investing in these small companies that are doing very well financially for themselves. And I started forming more connections and more of a group and discovering that there was other people out there like me. At the same time, I also discovered when I got on social media that the Wolf of Wall Street hasn't gone away either. And there's another group or groups of these people promoting these penny stocks and doing it, somewhat unethically at the very least, and potentially occasionally, not just unethically, they take it a step further and it's criminal, right? So both of those groups still existed. And I actually started out on social media as a channel that was exposing these scams, exposing the Wolf of Wall Street investors. And, some of my content was identifying good stocks, good companies, but 50% of my content or more was exposing scams, and content was good. And it was not very hard to go out there and find some of these companies that were doing some very questionable things and making content on social media. For me, it's YouTube videos, exposing what they were doing that was wrong. And I was trying to educate microcap investors, protect investors that come down to this space. I was trying to prevent them from getting scammed. And I was making these videos showing people what to look for to avoid these scams. And one of the problems with it is that there's a lot of money in it still. There's a lot of people out there that are making money doing this type of thing. And after about 2 years, I grew my channel to 6,000 subscribers, and I got canceled, I got doxxed, and I got threatened with lawsuits, right? Because
Wow.
exposing too many of those scams really puts a target on your back. And yeah, it was not a fun experience. So that actually happened on basically Christmas Day of 2023 is when my first channel was canceled, where I was exposing these scams. So Wolf of Wall Street still exists. They're still powerful. They're still making a lot of money out there. But then if we focus on the positives from that, right? So I had to decide right then, Christmas of 2023, do I just quit? Do I give up? Do I restart another channel exposing these scams, or do I do something different? And I decided to take a different approach, which was, if my efforts to expose scams weren't really appreciated, and face that constant negativity and lawsuits and doxing and everything, how else can I educate investors? And the other way to educate investors was to take that more positive approach, where now I try to focus 99% of my effort on not exposing the bad companies, but providing more attention, more eyeballs, more coverage for some of the good companies that don't get enough recognition, that aren't paying for promotions, that aren't paying for paid marketing, media, and pump and dumps, but the good little companies that are actually focusing on financial fundamentals, and they're too humble and they don't promote themselves enough. I can educate investors by connecting those good companies with good investors. So since 2024, I reopened my channel. I now have commonsenseinvesting.ca, and I've diversified myself a little bit, where I'm on multiple platforms now. They can't just cancel one of my platforms. And I've dedicated myself to educating investors that there is huge opportunity in microcap stocks. I believe that this is where retail investors should be investing, not mega caps and large caps, where we're competing with institutions and people that have politicians, people that have resources well above us as far as being able to obtain information. For retail investors, microcap stocks is the perfect place to be, as long as you're willing to put in the work. And so for the past, I guess, whatever it is now, 1 year and probably 9 months, I've refocused into those, educating investors that microcap stocks are where to be, that there are good companies out there. Here's some examples of some good companies. Over time, I show that, look at the amazing returns you can get from these good companies, and I'm much more focused on those positives. So yes, like the Wolf of Wall Street, nothing has changed there. It's still going on, but what has changed is that social media and the availability of information now for retail investors is making and allowing us to put together the good microcap investing communities, microcap club, small cap discoveries. Keystone Financial plays around in microcap stocks. Like, there are some fantastic Rivmont, Matthew Martin over at Rivmont. There's some fantastic microcap investors out there. We're forming these groups and investing where we should be, which is in these smaller high growth companies. And we're able to do that because of social media and the availability of information.
Nice. Yeah, it's really interesting how people see the Wolf of Wall Street and kind of think that that world doesn't exist anymore. But you just have to go on Twitter and see, like, search for a random ticker, right? And you see so many of these accounts just pumping and dumping like these penny stocks, and it's even bigger with the crypto, right? So it's just changed a bit from what I understand what you said. But with all that said, what is still a myth that exists or still survives among new investors when they hear about penny stocks or microcaps that you think isn't correct?
Well, there's probably quite a few, but I think one of the main things is that to be a successful microcap investor, you really have to take this space seriously. You have to dedicate yourself to it. But mostly for me, I would suggest that you need to be a very skeptical person. You need to, get rid of all those voices in your head, the things that you've been taught over the years. Like, I can't speak to where everybody's from, but I'm Canadian. I'm from Canada, and I tell you, the financial education here is terrible, and the tolerance for risk here is terrible. So as a young Cameron growing up, I was told, like, it's too risky to invest by yourself. You have to go to the bank and get a financial advisor. And then it's, oh my gosh, you invest in stocks. Stocks are way too risky. Like, so basically, as a Canadian, we're taught to go to a financial advisor, ask for the lowest possible risk portfolio we can get, and that financial advisor basically buys bonds, GICs, and gold. Right? It's like that. I could do that myself if I wanted to. And then you're a young person getting 3, 4, 5% returns instead of being in that building wealth position that you should be in, where you're getting 10% plus returns, right? So it's getting over that hump of skepticism and fear of risk. Microcap stocks are risky. There's no doubt about it. We talked about that. Wolf, there's still scams out there. I would say, even myself as an experienced investor, I have, probably 1 in 10 stocks ends up going to zero or being some form of scam. That does occur out there. You have to be willing to position size and have some other strategies out there. But if you come down here and you're willing to put in the time and put in the work, there's amazing returns out there to be gained. So one of the myths that typically invest that I see a lot of the time is we'll get these large investors that invest in mega cap stocks, right? And they think it's fun. Oh, I'm going to go play around in the microcap space, and they don't take it serious. And typically what I see is that these large investors will get hooked in by some story stock. They've got some product or service that's going to change the world, that's going to save people, it's going to grow 1,000% every year for the next decade. And you get these large investors coming down into microcap stocks, buying these 1 or 2 stocks that promise the world, but really they don't have articles written on them on Seeking Alpha. They have no other opinions. The investors don't do the research to read the filings themselves. They're just coming down here, and microcap stocks are basically treated like a lottery ticket. I'm going to buy this 1 or 2 tiny stocks, and it's either going to make me a fortune or it's going to go to zero. And what typically happens is, because they get lured in by those popular story stocks, it does well for a while. They think they're geniuses. And then over time, cash burn, dilution, more cash burn, more dilution, more cash burn, super heavy dilution. And your tiny little stock is now gone to almost nothing. And the large investor says, oh, penny stocks, they're all garbage. They're all scams. They're all terrible. Stay away. They're too risky. The fact is, with that myth, is that if you get in here and there's guys building, full strategies, managing risk, when you get into this space and you build a strategy to manage that risk, and you learn the ways to avoid those scams, and you're not looking for those story stocks, you're looking for fundamentally growing companies they all have some problems because they are microcaps. If they didn't have any problems, they would be larger companies, right? They're all fighting some challenges, but you could still find some profitable and growing companies that are massively mispriced, especially compared to the larger cap stocks that are 60 times earnings, 80 times earnings, 100 times earnings. If you do the work to actually find these companies down in this space, you'll find this profitable growing company that's single digits P to E, and it's almost too good to be true kind of thing. But it's too many people treat microcap stocks like lottery tickets. I think you have to come down here, give it a real shot, learn how to read earnings, build a strategy on finding these good companies, and I think you will be happy with what happens after that.
Nice. And so, from your point of view, what should new investors look for when analyzing a microcap company. So let's say I'm a new guy, I'm coming down to microcap. I used to invest. Maybe I'm a bit familiar with investing through larger caps, but I want to experiment with microcaps. So what would you tell me or advise me to look for?
Yeah. So, and it's a good point. I love that point where whether you're a new investor or you're new to microcaps, I feel like it's a learning experience. Just because you're investing in large caps, this is a very unique space. And so, what I tell people, the easiest way, what I tell people is go through this thought experiment. Let's say you sell absolutely everything you own, you have $1 million, but that's it for the rest of your life. And you have to buy a company that is now going to support you, your growth throughout your life, possibly your family. Like you have to buy a company, a single company you have to buy that's going to support you and your family for the rest of your life. What would you buy? And going through that thought experiment, instead of looking at, oh, okay, I'm looking for this valuation and this growth and these numbers and this and that and this other thing and making it very complicated, that simple exercise narrows it down to possibly the top 4 or 5% of companies, because you're looking at not just specific and very confusing metrics, which you can learn over time, especially as a new investor. You're looking for a high quality company, and that's it. So, you look at these story stocks that promise the world and don't make any revenue yet, right? Would you invest your last dollar in that? Would you expect that story stock that makes no revenue to support you and your family for the rest of your life? Seems pretty risky to me, but people invest in those all the time. Or would you invest in that slow, boring company that's getting 0% growth, but yes, they are making some cash? I mean, that might work for now because it is cash producing, but with that low growth, what's going to happen in 20 years, 30 years with inflation if you can't get that company to grow? That might not be the best investment either. So a lot of the people looking for deep value in microcaps where the company isn't growing enough, that might not be the wisest decision either. So if you're truly investing your last dollar and you are buying this company and it's going to support you and your family for the rest of your life, you're typically looking for some growth. You're typically looking for quality revenue, quality growth. You want to see some earnings, you want to see some cash, and maybe you could take a little bit of risk where it's not quite cash producing yet, or it's not quite cash profitable yet, but it is going to be very soon. You find a company that's not only good today, but is growing. It's improving every year and it's trending upwards. And I mean, if you could just simply find that, where you're looking at a company and it's already a good company, fairly high quality revenue, it's profitable or close to profitability, and it's improving every year, and it's got some good management that's not going to run away and scam you when you buy the company. All of a sudden, you've got probably a winner. You've just thrown 90 to 95% of microcap stocks in the garbage with that simple criteria, and you're left with some of the top stocks. And only then does it get a little bit more complicated as far as like, okay, how much growth and what's their valuation? But at that point, you're already dealing with, the best of the best. So look for a good little company that you would like to own. And that's the interesting thing in microcaps, right? Like, people forget when you buy shares of a company that you're an actual owner of that company. And that's because when you're investing in NVIDIA, nobody is deluded enough to think I buy a couple shares in NVIDIA and I'm an owner of NVIDIA. Like, let's get real here, right? But with some of these microcap stocks, these penny stocks, they have a $12 million market cap. If you're a larger investor and you put $150,000 into that company, you might be the largest shareholder. So you are even smaller retail investors. When you're buying shares of these companies, you are literally an owner. You could have a percentage of ownership, a meaningful percentage of ownership in these companies. So getting that thought process of making sure you're looking for good companies that in real life would support your family, that's kind of what I'm looking for. And it's like that type of thought process, which is why I named my channel, right? Common Sense Investing. I'm not going to sit here and, throw, financial metrics at you. Like I've got a, 6-year degree in finance or anything like that. It's the simple thought process of finding a company that you would like to actually own, and that will probably be a good stock.
Got it. And say we already eliminated 95% of the microcap universe. So we are left with that top quality 5%. Then what single metric or what number should investors follow after eliminating the 95% that maybe isn't worth looking at?
So I would focus on, and again, this is a bit of a thought process in microcaps and tiny companies. I would focus not on one specific number. Look for trends. Look for improving. That is what I do in microcap stocks. That is kind of my last advantage, I think, moving forward, in the opportunity in these small companies, fighting against artificial intelligence and all of these AI powered stock screeners and things out there. If I could find a company that's trending up before AI can figure out that it's trending up, I'm going to do very well. So I don't really focus on one single number. I am looking for those trends, and it comes back to that concept of a good company that's improving. So, things that we're looking for is inflection points. So, the company is maybe growing in revenue, and that's noticed by the market, but are they hitting an inflection point from unprofitable to profitable? And in the next 12 months, they're going to report 3 quarters, 4 quarters of growing profitability on stock screeners. If I could find it as it's hitting that trend, that's what I want to see. It might be simply that it's a trending improvement on the product that's not getting noticed by the market. So the product is improving, company is getting better, company is fundamentally improving again as a small business, but share price is going down for whatever reason, macroeconomics, trade fears, whatever it is. You get that improving, trending up company with a declining, trending down share price. That's kind of something that I'm looking for. So there are certain requirements. I mean, we basically have what's called the twin engines here in microcap stocks, and that is the first engine is kind of two things combined, which is you're looking for sales growth and you're looking for margin expansion. And basically what that's saying is you want increasing profitability improvement, right? You need sales growth and you need profitable or close to being profitable, trending up. And the other thing is the multiple expansion. So with that, like I said before, sometimes you'll be in here and you'll find this massively growing company that's so mispriced and it's sitting at 10x PDE, and in a year's time it goes to 30x PDE. Well, you get massive returns. You get those 200% returns without the company doing much. Just the valuation expansion alone is a 200% gain. So we're looking for growing profitability. We're looking for the multiple expansion, which is the discovery process as these small stocks, as they get discovered by larger investors, funds, small institutions, large institutions. You get that discovery process and multiple expansion. That is kind of the second engine driver here that we're looking for.
Interesting. And I think one of the things that got me hooked on what you just said is the part on AI. Not because I'm super excited from an investing standpoint, but I've been getting a lot of comments from my non-investor friends on like things I could do to use AI to improve my process. And maybe I'm just being bit late to the trend, but I wanted to know what's your opinion on how AI is helping you do your research and analyzing these companies, and looking forward, what kind of role will it play in investing, in your opinion?
Right. So I try to be, number one, I'm a very contrarian. I like a challenge. And number two, I try to stay a positive person. So I know like 15 years ago, I was told, well, don't invest. It's too risky. Like you're never going to beat financial advisors. You're never going to beat accountants. You're just some guy, Cameron. You don't have that financial background. So you can't beat those people. And I think I have. right? Like I've done very well for myself over this time. And now fast forward to 2025, and I've put out posts about this where the new thing is, well, give up investing because you're not going to beat these like AI powered quant strategies. And for me, that's a challenge. Like game on, let's
Yeah.
do this, right? I'm going to prove that I can beat these AI powered quant strategies. And I do feel like there's a huge opportunity here with artificial intelligence combined with a real human, microcap retail investors, combined with the small little companies we get out there. And basically, there's two reasons for that. Number one is that the information playing field has now been leveled. Institutions and funds and larger investors used to have all these resources that we simply didn't have access to. Actual hard data through major screens used to be, you're talking $50,000 licensing fees that these institutions were running to get this type of data. We can go get it now, usually for about $25 a month. So that availability, the access to information now for your average retail investor is much more level to the larger players than it ever has been in the past, right? Then also the time component. Another advantage that these institutions and funds used to have, these large investors used to have, is time. I mean, most of your average retail investor has a day job, right? That this is a hobby where they're trying to make some income on the side. They're in the accumulating wealth phase of their life, and they want to invest in microcap stocks, but they're an electrician, whatever they're doing during the daytime, they still have a job. They didn't have time to find all of these companies. Again, now, thanks to artificial intelligence, the time required to learn about a company, research a company, compare it to other companies has been reduced significantly to the point where we can compete with some of these larger players in the space. You can sit down for 2 or 3 hours on a weekend, and with help from artificial intelligence and some of our microcap stock communities kind of getting, narrowing that pool of thousands of stocks down to maybe the best couple hundred, and then you could take artificial intelligence and find out of the best couple hundred stocks which ones are your favorite, and you could learn about them very quickly, very easily. That's a huge opportunity. That is a huge opportunity, right? Is more information for retail investors, less time it needs to research a stock. And then when you combine those two things, and where I think my opportunity really lies, is if you're willing to do that, put in the time, research more stocks. We have more information. I think that in the future, due to AI, I could still beat the AI because I could find those human only inflection points, right? Artificial intelligence is going to get better every year, but they're going to find, again, trends, growing profitability. They're going to find trends of an improving company once it's reached certain milestones. Again, if I could find these smaller companies down here in this space, in microcaps, that aren't discovered yet by artificial intelligence, and I can, as a human, recognize that inflection point, recognize that change where this company maybe wasn't that good last year, but this year it's improved. And I think next year it's going to improve to the point where it is going to get picked up by AI. All of a sudden, I'm at the forefront. I'm at the very initial stages of the discovery of this company. And I think that is really the opportunity right now in microcap stocks, because thanks to artificial intelligence, what I see is that it's now going to take less time and we're going to get more consistent discovery. So in the old days, 5 years ago, a company could report growing profitability, and sometimes they wouldn't get noticed for 2 years, 3 years, 4 years. I mean, that is part of why I created my channel, is to create some coverage, put some eyeballs onto these good companies that nobody was looking at. But now, thanks to artificial intelligence, I think these companies that do a good job, that are good companies with good management teams that are growing and, high quality growth and get profitability and start producing cash flow, they are going to get picked up by the system. And we're going to get some nice, consistent discovery. We're going to get some really nice, consistent share price gains compared to what we used to see in the past. And I think that's such a huge opportunity for your average person to get into microcap stocks and find those human only inflection points before AI can find them.
Nice. I have a follow up on that. I'm really curious to know, how are you implementing right now, in a practical use case scenario, AI in your process?
Well, it depends again how much you want to. I try to break my channel down into. I try to do as much for free as possible because I'm thinking about like the new investor who might only be investing $1,000 a year, and they can't afford a $500 a year Chat GPT subscription because that's half of their investing capital, right? But there are some free options out there, whether it's the free version of ChatGPT, whether it's Perplexity AI has a really good AI platform. There's some Copilot is actually getting better. There are some free versions out there where you can even upload financial filings right into the artificial intelligence. You can ask it questions. You could, if you don't trust its answers, you could ask it, okay, what page can I find this information on? You could do better history searches for management teams. You could do better history searches for board of directors. You can do a history search on the auditors that are auditing the company, which is a great way to avoid scams, by the way, is researching the company that's auditing them and whether they're legit or not. So again, it's not using AI to pick the stocks for me. I'm going to do that. And that's always I'm going to crush AI. I know I am over the next 5 years because I'm gonna pick the better stocks than AI because of these human inflection points. But I can use AI to find those inflection points easier. And it's asking those questions, not the generic what's the best stock today, what's the highest growth stock today, but I can go to AI and say, hey, can you tell me about the history of this CEO? Does the CEO have any alleged accusations of any kind of alleged pump and dump or SEC charges? Can you tell me about this company's auditors? Has this company's auditors ever been charged by the SEC or any other regulatory body for any kind of have they been fined in any way? Like, we could ask these specific questions to not only do research quicker, but also do research a little bit deeper than we used to be able to do in the past. So it's finding those human changes. Maybe you use AI to pick out certain words you're looking for in their management discussion documents, right? There's those certain ways to find those little inflection points that are getting easier using AI without letting AI do the work for you.
Yeah, I love how you said don't search for what's the best stock right now, because whenever some friend does that and comes up to me and says, "Look, I think this is a great stock," then I go and look at the numbers, and it's like, I don't know, 20, 30 times sales, and it's burning cash like crazy. And so it's really funny how someone can actually recommend these stocks to someone. And I believe that's the better approach, right? So asking specific questions on a given company or the management, and actually understanding the fundamentals of the business. So yeah, I actually love that. And maybe going back a bit to red flags and actually how to analyze the stocks, what's something that makes you immediately close the tab on a company? Let's say it's already on that top 5%, so it's not a scam or anything shady, but on that top 5%, what makes you pass right away?
Probably nothing. Probably nothing, to be honest with you. So one of the things that I tend to discuss a lot is that when you look back in hindsight, when you look at people investing in the microcap space on social media, it looks like everything is black or white. Like, I do it myself. I'm guilty of it. I'll be like, wow, look at this stock I talked about last year. It's up 200%. Aren't I amazing? Kind of thing, right? When you go back that 2 years, those companies, it's a balance of potential risk versus a balance of potential reward. And I very much compare microcap investing to poker, like a Texas Hold'em style game of poker, where you're never sure about anything. The best hand, the best company in the world isn't always necessarily a winning stock or a winning hand in poker. But if you play those winning hands enough, ultimately, and you have a bucket of those winning hands, a bucket of those winning companies, you're going to win in the long term. You're going to occasionally lose a hand that looked good. You're going to get some hands that you win that you didn't expect to win. You're going to get some hands that lose that you didn't expect to lose. So there's no real red flags to me, because I tell people again, try not to make it too complicated. Otherwise, you're going to get burnt out. My goal in microcap stocks is to make money. If I think a stock is 50 cents today and I think it's going to go to $1 in 6 months, then that's a good stock to me, whatever the reasons are. And, we go through these different cycles of microcap investing. I feel like right now in 2025, we had a lot of new investors during COVID. I think something like 20% of the market was new investors during the COVID time. And I would suggest in microcap stocks, it's probably more than 20%, probably 30, 40, even 50% of microcap investors probably started during COVID. And we've gone through these phases of learning. And right now, that phase seems to be these people, they've learned how to invest, but they're looking for the perfect stock that doesn't exist. So perfect growth, profitable growth, high insider ownership, high quality management, high quality board, perfect share structure, just perfect in every way, right? High quality product with a moat, all the checklist of things. And so for me, there's not necessarily one thing that makes me run away, at least from those high quality companies. There isn't one thing. What it is for me is there's things that you look at the companies, you look at all the potential rewards, but you also look at all the potential risks, and you look at those risks and you're like, is that something I can live with? Can I sleep at night? I have to, with an unbiased lens, look at all that risk, think about the downside. What will happen if these risks happen? Will the stock go down 20%, 40%, 75%, 100% if those risks occur? Look at the potential rewards. Do the rewards balance out that risk? Can I live with that? Can I sleep at night with that? And then from there, if my answer is yes, I kind of balance out, okay, based on those risks and rewards, what size of a position should this stock be in my portfolio? So it's like poker in that you're constantly balancing the potential rewards versus potential risks. You're looking at odds. Everything in hindsight looks black and white, but everything in real time is gray, and you're balancing those probabilities. And then as new inputs come in, earnings, press releases, filings, company is improving, company is getting worse, you're reevaluating your thesis, you're reevaluating your odds based on those new inputs, and then you're making a new decision. So for me, if it's already a high quality company, there isn't necessarily one thing that'll scare me away. It's basically if I get new input that increases my risk, and again, another new input that increases my risk, eventually, once those inputs keep coming in, eventually it changes that risk reward balance. And it's a balance of probabilities. And at some point I'm out. I'm either trimming. You don't have to sell 100%, right? You could trim to reduce your risk, trim small, trim medium, trim heavy, or just get the heck out. And it's always that slow input evaluation of balance of probabilities.
I think that's the perfect segue onto the next question. I was about to ask you on how you size these positions given the extra thin liquidity of these microcaps. And maybe for the people that aren't too familiar with these terms, you can also explain what a thin liquidity means. But yeah, that would be perfect.
Right. So like thin liquidity is just essential, or liquidity itself is basically the dollar amount of the shares that trade per day in a stock, right? And what happens is when you get thin liquidity, you don't have a very high dollar amount of shares traded in that stock per day. So if you think about that in real time, if you're a large investor that wants to buy, I want to buy $250,000 worth of this stock, and it's only trading $5,000 worth of shares per day, that would be thin liquidity. And as a large investor, if you try to buy up those $250,000 at $5,000 a day, you're buying 100% of the volume more than a month, you will drive up the share price of that stock, and at some point it will get so high that it doesn't make sense to buy it anymore. So again, I don't have that problem. If you have to keep in mind is that microcap stocks are the place for people to build wealth. This is your wealth accumulation stage down here in microcap stocks. I would suggest if you're worth $10 million and you're thinking of putting like $250,000 into a microcap, you probably don't have to do that unless it's your hobby, unless it's fun. There's Rivmont has a microcap fund. Pender has a microcap fund. For $10 million investors, you could give your money to a fund and let them do the work for you. Microcaps are really for retail investors, for the average person. Now, I don't know many average people that are putting more than, $5,000 to $20,000 into a single stock in microcaps, right? So typically for the smaller investors, the thin liquidity, a lot of people look at it as a disadvantage. I actually view it as an advantage. It's hard to buy. It's hard to get into. You do your research. You're investing $15,000. It trades $5,000 per day. It'll take you some time to buy that stock without driving its share price up, but you could do it. And then if you're right and the company improves, you're looking with the thin liquidity at a supply versus demand case in the future, where now the company is improved. Now larger investors than you want to buy it. Now institutions want to buy it. And it's got such thin liquidity. All of a sudden you have this high demand and low supply. And there's absolutely no better place to be in the world, in the financial world, anywhere, not just stocks, but anywhere in the financial world, than in a situation where you control the supply that is very low of something that is in high demand. So thin liquidity for me, for your average investor, again, it's not a concern, it's an advantage for average people. It's a concern for larger investors, which I like. Right? That's part of the discovery process. I want this company to first get discovered by your average person and then grow to the larger investors, and then small funds and family funds, and then small institutions and large institutions. That's the discovery process. And once it gets up to there, you won't have a liquidity issue selling. I can guarantee. You've got a successful stock with high liquidity. Everybody wants it. You own the supply of something that's in high demand. That's absolutely perfect. So again, it's breaking these common myths. It's breaking these common misconceptions in microcap stocks, that I could look at this again and people will say, oh, it's too risky because of this. And I say, like, think about it. Sit down, think about it, use some common sense. This risk that you've been told about is actually one of her greatest advantages.
Yeah, for sure. And I see like a movement of, if an investor spends enough time studying and learning and he has a small capital base, eventually he will come down to small caps or micro caps, because it's where it makes the most sense, right? It's harder to double your money if you're investing in a huge company rather than a small one. So I also I'm on board with your thoughts, and it's nice to see that actually small investors might have an advantage over the big institutions in some parts of the market, right? So yeah, I think that's fantastic. And I would like to go back maybe to the start of the interview, where you mentioned you uncovered some scams and you got some problems because of it. You lost your last channel. And I'm interested to know, what's the biggest scam you ever uncovered, and what was it all about? So you can give us maybe a bit of a case study on a scam.
Right. So it's kind of nice because I could probably talk about this one without getting sued, because I think the company at this point, I think, is basically gone. But the most devastating one I had was a company called Meta Materials. And it is the classic. It is an absolute classic, like scammy type stock. I wish somebody would do a documentary on it. because it's one of those, it's a meme stock, right? And in this situation, what you get is a tiny little Canadian company. It was based out of, I believe, Dartmouth, Halifax, Dartmouth, Nova Scotia, Canada, with a management group that was, partially from overseas. And they come into Canada and they open up, it was like MMAX, I think was their ticker. And they were a tiny little microcap stock. And they were going to produce something that was going to change the world. It was this thin nanomaterial film that was going to be put in absolutely everything to reduce breakage and stronger than anything out there. And it's going to be going on all military devices and all technologies. You're never going to break a cell phone screen again. Militaries are going to have it on all their planes and blah, 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 blah. It's going to change the world, this one product technology. And it went from a tiny little microcap stock to a billion-dollar company. It had a billion-dollar market cap, right? Just on this potential, the promise, the story. They had zero revenues. There's more of a story behind it. They had no revenues. They took some of that capital. They went out and bought a company that did have some revenues, so they could pretend, they could say, oh, look at it, we have got revenues. We're not a pre-revenue stock. But effectively, their core business was not getting revenue, and how they would promote it and how they would pump it was patents and partnerships. So again, you get these uneducated investors, or maybe even larger investors, that are just hearing about this company for the first time, and it's very promoted, spent money promotion on this product's going to change the world. It's going to be worth $1 trillion. You need to invest now. FOMO, fear of missing out. It's going to go to, it's 1 billion now. It's going to go to 20 billion in a week, kind of thing. And what I thought is that when I would expose some of the issues, like pointing out some of the concerns, so you would go to their earnings call, and it was like going to a science fair. They would talk about the science, they would talk about the product. There was no path for growth. There was no, when is the revenue coming? There's no path to profitability. There's no discussion of cash. There's all these red flags. And I thought people would be happy with me and be like, wow, Cam, that's great. You saved me, kind of thing. And instead you get pushback, because these kinds of companies, they will convince you. They get a fan base where people fall in love with this company, and they will be out there on social media, and they will be embracing and positive reinforcement of anybody who likes the company. And they will be trashing, doxing, and threatening lawsuits on anybody who talks negatively about the company. And that is the script, right? Is that if you want to support this company, you feel good. Everybody loves you. You're promoted. Wow, look at this great new investor who loves my company. And so you get this positive mental reinforcement. And that's tough for, it's another story, another podcast, but for vulnerable people and vulnerable investors that don't know what they're doing, and or vulnerable people that think they're investing in this company that's going to turn their $1,000 into $1 million. And Metamaterials went through this giant story. They never produced anything. Their cash burn was insane. They diluted, more cash burn, more dilution. The dilution got out of control. Eventually, the CEO who was doing these activities was kicked out by the board, and the board took a look at what the company was actually worth. And like I said, the company is effectively now gone.
Okay.
So that is the playbook, right? As you find this amazing change the world product, you surround it with a social media presence of positive reinforcement and attacking any negative voices, and then you just let it fly. And the regulators aren't going to protect you, but Metamaterials has been my most famous one, in that I think everybody heard about it. There's videos coming out about it. It's also tied to another stock called, I forget the oil and gas company it's tied to, but there's all kinds of problems over there. But the oil and gas company, which was a company it bought, was a former stripper pole company that all of a sudden discovered, billions of dollars of oil that didn't exist. And another long story, but basically, that is the playbook. Is you find something to pump people up, and once that momentum dies, you find a new thing to pump people up. And unfortunately, people lost all their money.
Interesting. I'm so curious to know what's the biggest lesson you've learned from studying financial scams, because it's really interesting to study these case studies and the scams, just because they are inherently fascinating stories and so on. But how can an investor apply those lessons into actually getting better or having better returns over time? So yeah, maybe that would be useful.
So it's not, we're getting into like, I'm generally a positive guy. This is where I turn into a negative guy and I say things that people don't like. You'll be better as an investor. You'll be better as a microcap investor if you're, I always joke around, grumpy, skeptical, prove it person, right? If you are that grumpy old man, I say all the time, grumpy old man, I don't like your company, I don't like your stock. Well, why? This is the best company ever. No, because of this, this, and this. This is why I don't like it. It sucks because in life, we typically want to be that positive person. We want to be like, yes, this is the best company ever. Yes, I totally agree with you. Yes, I'm going to invest in it. Yes, we're all going to make money together. Yes, I trust the CEO and the management team. Yes, I love the, it doesn't work that way. Similar again, I always come back to the poker references, but the best poker players, what percentage of hands do they fold? Most of them, right? Like, um, playing hands is dangerous. You only play your hands when you have that risk reward balance of probabilities. So the one thing I've learned from these scams, please people be skeptical. I've warned people when you get into microcap stocks, and I've said this whole interview, this entire time, that this is the place for um, retail investors. This is the place for average people to be investing, in my opinion. The one exclusion for that, the one person or type of people that I would say that is not true and you should absolutely stay away from microcaps, is people that are over trusting. You have to be skeptical in this space. There are scams. There are many scams. It's not just scams. There are companies that simply, honestly overpromise and underdeliver. There are companies that have challenges that they don't communicate well enough. There are other things other than scams that, the bucket of good stocks is very low in this space. I say it's normally 4%. So that means you have to fold 96% of the hands you're given. You have to be skeptical with 96% of the companies that you research. And it's the trusting, believing that, yes, this product is going to save the world. Yes, the CEO is the greatest person ever, very altruistic, and he wants to make me a millionaire, right? It's that trust that gets people in trouble. So it's tough to say sometimes, but what I've learned over the years, you will make more money coming down into microcaps and being that negative, skeptical, angry person. And that's hard for some people to do.
Yeah, and I guess you can be positive in the rest of the endeavors in your life. Just be compartmentalize, so to speak. And it's interesting also that you mentioned the under delivering and over promising part, because arguably that's maybe the most dangerous scam of all, because you can't, if you're like an experienced or seasoned investor, you can't figure it out on the numbers, and maybe you are trying to spot an inflection and actually believe the management team, and then you get disappointed. So maybe that loses, like, makes investors lose more money than the actual easy to spot scams. um, Now, turning into the positive side of things, I would love you to kind of give us a pitch or case study on a company you find interesting right now. I know we have some common investments. Not sure which of them, so not going to mention names. But yeah, if you have an interesting thesis you'd like to share with my audience and it would be cool.
So I think I'm actually going to pass on this one, but I'll explain it and offer you more than just a no. But here's one of the things is that, generally my channel, I try to, a common misconception is that a lot of these platforms and a lot of these people are stock pickers, right? I don't ever want that misconception. I don't want to pick a stock because I don't want anybody thinking that I'm a stock picker. I'm not a service that, I've got a Patreon, I've got a Substack, people subscribe to it, people pay me money. I absolutely want zero confusion that anybody subscribes to that service and they think, well, Cameron is going to like pick stocks for me and tell me what to buy or what to sell or anything like that. What I am is a communication and networking service, basically, commonsenseinvesting.ca. So I like putting good microcap investors together. I like putting new microcap investors with experienced microcap investors, and we have conversations and we do research and we network together. So like you talked about some of those concerns about like finding scams and, over promising and under delivering, that's best leveraged by being in a group with other people and using AI as well these days. But, that group, leveraging a group of microcap investors is what I'm going for. So my platform is communication, research, networking, hive mind. Let's all find the best good companies. And that's what I do. So I don't, the old cliched statement is I would rather teach a man to fish than give you the fish. If I give you a stock, you make money on this one stock and then lose money in the next 3 stocks. And this interview basically goes to waste. So, my stock pitch would be, use artificial intelligence to help you research companies. Look for companies that you would like to own, that you would really like to own, that are good companies. Companies, don't focus on the fancy metrics. Find companies that are improving, and maybe their share price isn't improving, but the company fundamentally is improving. That's what you're looking for. Join a stock community, right? Leverage the experience, the conversations, the research. Now, whether that's mine or whether that's Microcap Club or Small Cap Discoveries or Keystone or Geo Investing or any of the fantastic places out there for microcaps, I don't care. It doesn't have to be mine. Join the best stock communities to get that networking and conversation. You can actually find most of them on my website, commonsenseinvesting.ca, and there's a tab that says resources, and under that I've got an Excel spreadsheet with links to all the best microcap communities in there. Follow the right people and you'll get so many good stock pitches. You'll get 10 a month that are more than what I can deliver, and you'll get advice and experience, and you'll learn over time to take those 10 pitches a month and find your favorite one stock every month kind of thing, right? So that's what I want to go talk about. If I'm going to give a stock pitch, what I'd like to communicate to people is, I always joke around about this. It's fun, but I don't do YouTube videos for my health. I mean, you probably know, David, yourself, you're here as well, how difficult it is to make videos, the preparation, the time, the editing, audio, video. Like, I get paid, people don't realize this, but I usually make about $10 per video that I make on YouTube. $10, right? I'm not becoming a millionaire on YouTube. So why do I have YouTube? It's because that I enjoy communicating with people. I like talking, obviously, and I want to educate people. I want to form these groups of microcap communities. But the fact of the matter is all these stocks out there, there's thousands and thousands of microcap stocks. I'm not randomly picking those stocks, and I'm not making these videos for my own health. Some of these videos can take me 10 hours. If you factor in researching the company, right? Taking the time, reaching out to people, talking with management, there could be 4, 5, 6 hours of research. Some of the videos that I make, it's not 4, 5, 6. We're talking about 40, 50, 60 hours of research on some of these companies. Then I make a YouTube video where I have to, script it, do all the slides, record it, edit it, make thumbnails, make catchy taglines, and then finally publish it. We're talking anywhere from 4 hours to 400 hours probably for some of my videos as far as time and effort. So if I'm making a video on a stock, it's not because it was a quick 9-minute video. It probably took me days or weeks to make this video. Take a look at it. Take a look at it. I look back at I keep records of all my videos, and I ran the returns of all my videos. And of all the videos of all the companies that I introduced in 2024, the return today in August 25th is 78%. Now, that's not saying that they all got 78%. Some went to zero. Some are down 80%, 90%. Some are down 50%. But there's others. There's videos on companies that I made in 2024 where those stocks are up. Zoom Technologies up 1,100%. NTG Clarity Networks up 1,300%. When I make those videos, people are like, why, Cameron, that's such a garbage stock. Do you think that I spent 10 hours making this video because I think this is a garbage stock? Do you really think, that I put in that time and effort to present a stock to you, and I just think it's going to be garbage? They're not all going to be winners. Basically, with my videos, it's not the top 4%. I basically eliminate the worst 80%, and I make videos on the top 20% of the stocks that I think are out there. So there are going to be losers. You got to do your own research, and that's obviously what I encourage people to do. But there's some real gems in my videos. There's stocks up 10x stocks just from 2024 are in my YouTube videos from 2024. Now I'm making videos in 2025. I get the same problem. I'll make a video on a stock, Cameron. It'll be, garbage company. Why did you waste your time? Wait 18 months. We'll see where this stock is at. Right. So I don't have a single stock pitch other than go look at my YouTube channel.
Got it. Actually, the intention was to learn from a more practical use case scenario. So maybe I can reframe the question, and if you still don't want to answer it, it's totally fine by me. And I think people should definitely go look at the videos. And the people that say that that company is garbage and you spend 10 or 20 hours researching it and getting no money from YouTube, maybe they should rethink that. But yeah, if you have a past company or past investment that you're no longer invested, that it's no longer a good opportunity, but it was a good, can be a good case study for me and my audience, I would really appreciate that. Maybe one of those 2024 stocks that went up a lot, and we can give all the disclaimers. It's not an investment right now. It's just for the purpose of learning from a practical scenario.
Sure. So a good example of that, and still, disclaimer, I'm still a shareholder of this stock. This is NTG Clarity Networks. So what you get in these tiny microcap stocks, NTG Clarity Networks at the time that I introduced it to my channel was a 3.5-cent stock. What you'll find is that you get a lot of misconceptions and biases, even within the microcap stock community, right? Not saying we're perfect, that all large cap investors are bad. We've got our own biases. Typically, when you get into like the penny stocks, the true penny stocks that are 3 pennies, most of them are garbage. I hate to say it, but normally they're down to those levels due to high dilution. So in this case, NTG Clarity Networks was at the time a 3.5 penny stock per share, and they were operating out of the Kingdom of Saudi Arabia. So if it wasn't enough risk that this was at the time an unprofitable company worth 3.5 pennies per share operating out of the Middle East, which is known for volatility, and if something happens, it could go to zero very quickly type risk. It was a completely ignored stock. Nobody was paying attention to it. What you saw in the background was that I discovered it in, I think it was late 2023, and it had already had 2 years of improvement. Everything that I've talked about in this video about find these companies that aren't discovered, that share price might be going down, but the company is improving, they already had 2 years of improvement. They had growing revenue. They were about to reach an inflection point to being positive. And I think before they got discovered, they were just hitting that inflection point where they were actually, at least on an EBITDA basis, positive. Nobody'd heard about them. Nobody knew about them. So all these biases due to risk. When you dug into NTG Clarity Networks, this is the opportunity in microcap stocks, is finding what only a human can find. I mean, yes, they were in Kingdom of Saudi Arabia. You do your research. Much less risk today than it used to be. I mean, the U.S. is getting along with Saudi Arabia. Oil prices have been high. They're flowing with money, and they're trying to take all this cash to diversify their economy And one of the benefactors of that is this little Canadian company that's trading on the Canadian markets for 3.5 cents that nobody knew about. So you find those little inflection type opportunities that only a human can discover. I spoke with management. What's changed? Convince me how you're not a 3.5 cent company. And what you'll see then, and I've got slides out there somewhere. You could literally follow the perfect discovery process for this NTG Clarity Networks, where they did a reverse split. So they weren't a 3.5 cent stock. They went up to all of 20 cents. But because of that 20 cent share price instead of 3.5 cents, they got discovered by retail investors, small retail investors like myself. That got more attention. The company continued trending and improving every quarter. They made promises, executed on those promises. Earnings weren't perfect, but earnings were getting better. That discovery went from smaller retail investors to larger retail investors to larger retail investors to pretty soon they're presenting at investor conferences. They've got a history of 2 years of execution and improvement, and they're becoming profitable. And then that opens up the next level of discovery, which is your small funds, your family funds, and your smaller institutions. And all of a sudden, they go from being incredibly cheap. I mean, this was like a $10 million market cap company that was producing $50 million of revenue, growing at 100% per year. To they start to become more fairly valued through that discovery process. And you can literally map it out where these different funds, these different larger investors, these different discovery process people discover the stock. What now looks expensive to me, because I first looked at it at 3.5 cents and it's now $1. Now it's got better liquidity, it's got a higher market cap, and larger investors are buying it. It just keeps going higher and higher and higher and higher. So if you look at a stock like NTG Clarity Networks, it was the perfect example of, a human finding this undiscovered company that has hit an inflection point where they weren't a great company a while ago. They are a good company now, good and improving, and just finding that change and honestly investing anywhere along that change, because it went from 20 cents to just about $3, has made investors money. And being open-minded enough to see that change and not have those biases and look at the numbers and look at the facts and avoid the biases and the fear, and to be able to model that out and then get that discovery process. I think, NTG Clarity Networks, you could do a whole case study post on that one, basically from 3.5 cents to $3. Talk to me about that journey, and that's a great example.
Nice. And what sort of business model were they operating? So you mentioned they were operating in the Kingdom of Saudi Arabia. So can you give more clarity on that?
So again, if we're looking at all stocks, something that's simple is preferred, and something that you understand is preferred, right? It's not always required. There are exceptions to the rule, but typically I'm looking for something that if the share price goes up, I know why it's going up. If the share price goes down, I know why it's going down. If I can't get that, I can't build conviction. So as far as different people looking for different products or services that they like or don't like, I feel like that's very much a personal decision on what people have comfort with. In this case, for NTG Clarity Networks, it was brilliant. And again, finding that inflection point is they had workers in Egypt. And Egypt previously was a large market. And what they do is they do IT services. So a company that feels like it's behind the times and needs to get caught up with 2025, it needs to modernize its databases, incorporate artificial intelligence, and do more with their data and develop these other solutions with their software. They need to update it, but they can't do it themselves. They got to hire somebody. NTG Clarity Networks was operating out of Egypt. The reason their share price was so low is the Egyptian economy collapsed. And what NTG Clarity Networks realized is that, hey, we're right beside Saudi Arabia. We have similar culture, similar values. We're very close. We have this Egyptian workforce that is really cheap because the economy has collapsed. And we have this other wealthy country over here begging for the services that we provide. So it was finding that opportunity, and NTG shifted they stayed in Egypt, their workforce is in Egypt, but now their revenue is coming out of Saudi Arabia. massive inflection point for them that's still currently growing to this day. And they're now close to 5 years of pretty significant revenue growth. And I mean, if you could have found them in year one and held them to year five of significant revenue growth, like that's kind of life-changing money. But the services, again, supply and demand, high demand for these IT services in Saudi Arabia, low supply. You've got these companies coming in from America that have nothing in common with the companies in Saudi Arabia, and NTG has been able to beat them out competition-wise because of their cultures, values, the type of company they are. Well, it's again with some of these companies, you do have to be careful because you have to be open to change, but change is how a lot of the scams work. So, a lot of the scams will take a company that used to be a gold exploration company. It's been sitting here doing nothing for 5 years. They'll take it over. They'll decide that now they're an AI infrastructure company and they're going to change the world. And they'll go from a 1 penny stock and they'll pay a bunch of promoters to go to $1. So you have to be careful. People are rightfully concerned of that type of change. It is a risk. At the same time, there are lots of companies that, again, you have to be open to the fact that your best stock next year might not be a great stock last year, and it might only be okay this year. You're looking for that change, right? If the company has been great for 20 years, it's not a microcap anymore. It's a large company. Forget about it, right? They're microcaps because they're tiny. They're tiny because they have challenges or something's changed. So like in the case with NTG Clarity Networks, just for one example, they were a Canadian company because they were actually servicing Canadian and American industries and companies back in the day. Large telecoms and enterprise companies in North America was their plan. The problem with that is that so much competition. A lot of those were kind of slowly dying companies. They didn't want to modernize, so there was a low demand for their services, and there was high competition. So they started out in Canada. That's why they're a Canadian company. They started out in North America. They had a lot of people in management that were Egyptian, so they opened up some offices in Egypt, and that worked well for a while until the Egyptian economy collapsed. Saudi Arabia is now attempt 3. Right. And people will choose not to invest in them because of that change. Well, they've failed before. Well, sometimes, what's the cliched statement, right? How many times do you fail at making a light bulb before you finally invent the light bulb? Some of these companies in the microcap space, they fail. And you have to look at, did they fail because of inadequacies, negligence? Is it a scam? Is management just incompetent? Or was those honest fails that they learn from, they change into something different, and now they find success? There's so many companies like this, right? D-Box is another one. I looked at D-Box, I think 6 months ago. They make the moving seats at movie theaters. I don't go to movies. I don't like movies. The movie theaters look dead to me. I didn't think that it was a great type of company, but you look at now, arcades are making a comeback in North America. They basically have a moat on their haptic seat technology. There's all these potential revenue streams. They have a new CEO and a new CFO is talking about growth. Change. The company has changed. It's up to us, to investors, to determine whether it's a good change or a bad change. But in the microcap space, you have to be willing to at least look at that change, try to get rid of your biases and misconceptions and look for the facts. And if that change is for the better, that's what I'm looking for. And so NTG Clarity Networks, they've basically, I shouldn't say failed twice, but they've had 2 situations that did not work for them. They are now in a situation that's working for them. Massive revenue growth, growing profitability, getting discovered by larger investors. And the people that looked at this company back at 3.5 cents and said, well, it failed in the past, so I'm not going to invest in it. It was kind of the wrong decision. And the beauty of microcaps is, even though it was a wrong decision at 3 cents, you could have changed your mind at 20 cents. You could have changed your mind at 40 cents. You could have changed your mind at $1. There's all these different, entering possibilities. So, but that's another podcast.
Yeah, for sure. That's exactly what I was looking for. So I think personally, I learned much more easily when I hear practical case studies that I can go back and study and look what happened and maybe apply that model or blueprint to other cases and improve that pattern recognition over time. So just to wrap up, I think there are those investors that become so good at this game that actually outgrow the microcap space, and I believe you're one of those. So when you'll outgrow the microcap space, what will Cameron do?
I won't. I'm moving more into the microcap space. I'm not outgrowing it at all. It's a constant challenge. Like one of the misconceptions, another one, like I don't want anybody to listen to this and think, well, this is easy. That's one of the big failings that people coming down into microcaps, back to that lottery ticket, large investor who's coming down here to pick, they normally pick one microcap stock. It starts doing well for a while and they think, this is so easy, right? All I got to do is come down here and pick a tiny little company with a life-changing product and I'm going to make a fortune. It's not that easy. It does take time. It does take work. It does take the willingness to learn, the willingness to be wrong. I always say to people, like, I'm never outgrowing this place. I'm never outgrowing microcaps because I always say that having a plan is better than no plan. And what you find happen is you make a plan, you're 99% wrong. You learn, you correct. You make another plan, you're 98% wrong. You make another, right? And you go through that progress where you're always making mistakes, you're always wrong, but you start building these plans, you start building these strategies that are now mostly correct. And once you can start doing that, that's when you make money in this space. In saying that, I'll never get bored of it. I'll never leave because it's constantly changing. Again, this new AI quant strategy is going to beat me is just a new challenge in 2025 where I'm more fired up today than I've ever been. Right. Mm-hmm. And things are changing. Industry is changing. We have these new companies coming up with these new products and new technologies. I mean, I've warned people that if you're too trusting of a person, you should probably stay away from microcaps. If you are an inquisitive person, if you are a curious person, a personality that likes learning about new stuff, this is the place to be. And that's who I am, is that new companies all the time, new technology, new space, now with AI, now with data centers, now with crypto thrown into the mix. There's so much to learn. There's so many new opportunities that didn't exist a couple years ago. So I'm definitely not outgrowing it. Like we can't outgrow our advantages in this space. Like let's say, okay, I moved to small cap stocks. They have discovery. Now I'm competing with institutions who again have more time than me, more money than me, more resources than me, and more information than me. The companies are calling the institutions. They're not calling me. Like I lose all my advantages. The second I move out of microcaps, most of my advantages are gone. And I'm just like every other investor, putting in the time, putting in the effort, but basically rolling the dice and taking a gamble. With microcap stocks, our advantages of, if I'm large enough, and you can email the CEO and get replies. Some cases you could phone the CEO and have a conversation. You could be influential in this space. You could find these mispriced opportunities that make you money. And in new industries, interesting industries with good management teams that you have a connection with, our advantages are here. And so it would be absolutely crazy of me to leave all these advantages and go do something else.
Sure. And actually, on the topic of connecting with the management teams, maybe that's something we didn't spoke too much about during the conversation. But what's sort of your strategy, or if you had to teach a new investor how to fish and how to find these conversations and get in touch with the management teams, what would you tell them?
Well, normally it's not too hard. I mean, start with an email, put some effort into it, write it like a real person. Don't try to pretend to be a financial advisor. Most of the microcap management teams are happy to get back to you. Most of them have contact pages that you could go to and write to them directly on there. So you're not sending an email. It's typically, I wouldn't say it's easy, but it's possible in the microcap space. Nowadays, I'm not sure if you need to so much. There's more and more companies now that are doing CEO interviews, that are becoming more proficient with social media, that are doing more earnings calls. So, I mean, if you get a company that's doing an earnings call every 3 months and maybe a CEO interview with a larger platform like Small Cap Discoveries, that's probably enough. I don't know that I need to contact them in other situations, but it is possible. And the nice thing is that there's multiple ways to win in microcap stocks. And another thing is that there are quant investors in this space that only focus on the numbers, that make money in microcaps. There's qualitative investors that mostly focus on management teams and people
Yeah.
and connections and competence, and they make money in that space. So you have this, at least you have options in microcaps.
Yeah.
You're not phoning the Nvidia CEO and getting an answer. You can choose to be a qualitative microcap investor and potentially make money, where you speak to management teams, you watch CEO interviews, you show up to investor conferences. There's 2 coming up this year, September 29th and 30th, Small Cap Discoveries Conference in Vancouver. And I think it's October 21st and 22nd. Planet Microcap in Toronto, Canada has another conference. There's multiple investor conferences every year that you could attend, and you can meet these CEOs in person and have one-on-one discussions with them. So at least in the microcap space, you have the whole range of options of what type of investor you want to be, and tailor it to what works for you. Because again, what works for me doesn't necessarily work for you. I don't know your skills, your experience, your competence. You might be better off being a quant investor, just looking at the numbers. You might be that person that is good at judging personality and body language and, building those skills when you have conversations, and you want to invest in management teams. Neither way is wrong. There's no wrong way here. What we have is options, and what one is best for you.
Yeah, I think that's the beauty of investing, is that there's like thousands and thousands of ways to make money. You just have to find the one that works for you. So in that sense, it's very democratic. And as long as you're good in your analysis and you have the right strategy in place that works for you, then you should be able to make good money. Yeah, Cameron, this was a wonderful conversation. I had a lot of fun. I learned a lot. So I'm just very grateful for your commitment to my audience and I. And yeah, thank you so much.
Well, thanks for having me on. Congratulations. I know how challenging it is to make content and do videos like this. So good work. Keep it up. We need more people like you in this space talking about it, putting the light on this space for us. So thank you for the opportunity to do that, where, microcaps do exist. There are people here making money in it, and they're not all scams. That this is a great place for retail investors to be. And anybody that's willing to talk about that, I've got the time for.